Hi everyone and welcome. I'm Tim Sylvester from Stock Marketplace, and I'm being joined today by Mr. Bradley McCosker, the CEO and Managing Director of the Australian Bond Exchange. Thanks for joining me, Brad.
Yeah, thanks, Tim, for having me.
That's okay. So obviously today, just a bit of an opportunity for us to have a quick chat about the Australian Bond Exchange, what the company does, and obviously your view to list on the ASX. So really quickly, before we get too far into it, Brad, do you want to give me a bit of an overview about what the Australian Bond Exchange is, what you guys do, and obviously the business as from a bird's eye view, basically?
Yep, sure. So we started around 2015. There's four founders who are still all very much part of the business today. And we provide direct access to the over-the-counter bond market for all Australian investors, which has been difficult for Australians to get hold of. And we've managed to work through the logistics and other hurdles to get rid of those barriers to entry. So at the end game, our goal is to provide equal access to all investors. So we've seen some early success. So our turnover last year was about $9.3 billion, and our revenue was up 79% to about 5.3 million. So we've been pretty successful in starting to see that market grow.
Fantastic. Now that's fairly aggressive growth, only being around for 5 years. What do you attribute the growth in the early stages to? Do you think what would be the main? What got you to this point now?
Yeah, I think it was actually so two things. One is just the right product at the right time. And so obviously bonds themselves are a safer asset as people are getting older and getting closer to retirement. They like the idea of bonds with their coupons. So as opposed to a dividend with a company where the company can decide to pay or not pay a dividend at any point in time, the big difference for the bond is that the company is actually legally obliged to pay investors. So there's no way around it. Investors will get paid. And that's a very attractive feature for the product, particularly for self-managed super funds and retirees. So getting that right. And then the second bit on top of product is finding the customer. And doing that, it's been through brokers and planners and other affiliate partners, but also directly. People are finding us directly and reaching out and asking us to help them create their bond portfolios. So it's been a number of paths to success, really, Tim.
Fantastic. I know when I first came across the Australian Bond Exchange, I was looking for a place to access over-the-counter corporate bonds for my clients. So I learned a bit about how the bond exchange works and the four different, or the minimum at least 4 different avenues that you guys have, mainly being the traditional over-the-counter bond trading and broking. But you've also developed this, the scalable financial technology enabling people to be able to access over-the-counter bonds in a couple of different ways. One of them being through Iress, another being through an online platform. Do you want to just give me a bit of a overview of how those work?
Yeah, the most, I suppose, notable of the contracts we've signed is with Iress. So not many people know, but the predominant number of trades that go to the ASX via stockbrokers is through an Iress terminal of some description. So a lot of auto routing goes through those terminals. And the deal with Iress was through those exact same terminals, brokers can trade bonds through the bond exchange. So for a broker using their Iress AutoPad, there is basically no difference between buying a stock from the ASX or a bond from the bond exchange. So it's a seamless transition for a broker to use it in an environment which they're used to and feeds through to their internal system. So back to the guidance of access for all, we've made sure the brokers can access the trading functionality of their Iress terminal for the bond market. So that's quite big. Obviously, Iress is a very large organization and a great software product for brokers, and they've got a very loyal following. So that's certainly one. The other is Australian money market. So from the Iress side, which is mostly stock brokers, the other end of the spectrum is people in term deposits looking for a higher yield. So the Australian money market platform is also one we're connected in. So the scalability of our matching engine is that we can plug into any of these platforms and give access to the advisory firms and also individuals themselves if they want it.
So a stockbroker, a financial advisor, a financial planner, anybody can access traditionally very hard to access markets purely by operating an Iress terminal.
Yeah, which was basically the kernel of the idea. I've been in the over-the-counter markets and an investment banker all my career, so over 30 years throughout the world, and came back here from New York, where I was working on Wall Street and active in the over-the-counter market. When I came back, I found that the products people should be buying, they didn't have access to, and instead were only buying more speculative stocks or term deposits which weren't giving the yield. And then there was that gap in the middle. That's what really started. Is like, let's just provide access. And then there's basically no half measures. How can we build it so everyone can access it, regardless of what system they're using, and how can we scale it? And we've managed to do the internal build, because there wasn't anything off the shelf, in order to build it from the ground up to make a scalable platform. So pretty much that's what we've done, and we're starting to see the fruits of that, Tim.
Fantastic. So it's all been built and it's ready to be basically scaled out effectively across the entire advisor network, wherever you see it.
Yeah. So one of the interesting things, we used very much a lean startup methodology, because at the end of the day, we are a fintech, even though bonds are quite a safe product. We have been building that project for about 3 years or so, the integration, the settlement process, et cetera, et cetera. And we were just doing customer discovery, really. So with the volumes we were getting, we hadn't even turned on the product yet. It was actually just something where we were trying to discover, what do people want? How do we get it for them at the best possible price? And the byproduct of that was billions in turnover. So who'd have thought? It's great when you get those sort of results, but certainly we see it as a scalable thing, and the market is a lot bigger than what most people expect anyway. So.
Well, that's right. And obviously the bond market is, far larger than the share market. So the opportunity for growth is large.
Yeah, not many people are familiar with that. It's something the world over, but just in Australia alone, which like new issuance. So last financial year, there was about 176 new equity issues on the ASX. To give you a comparison, in that same time period, there were 689 bonds issued. So that's like 4 times more bonds were issued last year than what equities were listed on the ASX. And then when you look at the value of those new issues, equities is about 40 billion, 40 and a half, I think, where with bonds, it was about 286 billion. So when you're talking about actual value, it's about 7 times the size of the equity market in Australia. So there's a significant difference in size. And mostly it's been barriers to entry for individuals where they couldn't access it because the cost of doing a trade was too high. Because we built it ourselves, we reduced those costs down to the minimum so that we can allow everyone access. So the market's there. It's just providing access to it.
Fantastic. So the solution basically is you're giving basically access to people who either otherwise wouldn't have access to an extremely large market, where the big end of town had free reign, and now you're basically, your mission is to give that to the everyday investor as well.
Yeah, absolutely. And I'm not speaking ill of bankers, because I certainly was one, but at the end of the day, if you can give access to everyone a product that they should be having, I think that's a worthwhile cause, and we've seen the fruits of that come through. But yeah, you're right, giving access to everyone for a product. Now, there is a counter to that, and part of it is, okay, so you're giving access to it. What about investor protection? So the other side of the equation is making sure that what we actually put on our platform is something that has some investor protections, and we do a lot of work on what the quotation rules are. So just like an ASX listing goes, where a company applies to list on the ASX, they have to tick a few boxes. The same, but more rigorous with regards to what it's like from an investor's behalf for bonds is they have to basically apply for listing on the bond exchange. We do the analysis and it gets submitted to the quotation committee, which will approve or disapprove the bonds. Now, to give you an idea, significantly more bonds are actually not approved to be on there than are approved. So we're quite rigorous on that, and we make sure that there's a number of factors that are involved, but basically it's 2 things. Show investors how you're going to pay them, and if you can't pay them, what have investors got? What assets can they take over? So those 2 things need to be met with a lot of clarity in order for it to be on our platform. So we make sure that we take care of our clients as well.
Fantastic. Now, obviously, leading into to an IPO, the Australian Bond Exchange is eyeing off the ASX boards fairly soon. We've seen a lot of successful large IPOs in the financial technology space, and obviously in the finance space as well. But the financial technology is the real the important factor here. The infinite scalability and fixed costs on a business that is obviously in a much larger addressable market than what the stock market is. So, can you give me a bit of an idea of what the maximum issue is going to be, how much capital you're looking to raise, and how many shares you're looking to raise to new investors across the IPO offer, Brad?
Yeah, so we're going to listing shortly. We're seeking to raise about 5.2 to about 10.4 million at about 65 cents, giving it a market value of about 75 million. The reasons for listing are a number of things, but the gap between what we currently report and how we currently run our business and being a listed company is actually not that great. We are in a highly regulated environment. We are an unlisted public company with over 100 shareholders already. So it's not a big step for us to get on the boards of the ASX. We felt, though, we've got to basically practice what we preach and give access to all. So to give access to everyone to be a shareholder, not just to be a client of ours. So to give access to everyone. And I think it's worthwhile doing. I keep worrying we've been undervalued, but at the end of the day, I'd like people to come along for the journey. And the best way to do that is to allow everyone access to us, not just access to the bond market.
Fantastic. A growing company in a growing area of the market with a very unique product offering and extremely good long-term outlook from what I hear. So, if there's anything you'd give investors or like to say to investors at this point in time, what would you say to them, Brad?
Yeah, I'd say that what this raise is about and getting on the ASX, the money is actually to grow our business. So we've built the tech. The risk is out of it with regards to will the technology work or not. We spent 3 years to do that. And now it's around our go-to-market and let's get more people on this to invest in a product they should be having. So that's really what it's about. You could paint a massive growth story here, but the numbers speak for themselves. We're dealing in a market that's 7 times bigger than the equity market and providing access for the very first time in the way we've done it through the Iress program. So certainly there's a big addressable market there. And for us, it's our duty to make sure we capitalize on it for investors.
Fantastic. Access for all.
Yeah.
Perfect. Well, thank you again, Brad. Thanks for taking the time and letting us know a bit more about the business. We look forward to the upcoming IPO and obviously the listing on the ASX in the future. Thanks for taking the time.
Yeah. Thanks, Tim. Thanks for your time.